Approximately 90% of the world's data has been created over the last 18 months, which is just an extraordinary statistic. You need a banking system, you need a financial services infrastructure that is modularized, that is available to be used by developers, and that is kind of integrated and plugged in to the most important part of our financial lives, which is our money.
I think what's interesting about that term, it still means a lot of different things for a lot of different people.
To some degree, embedded finance and banking as a service are somewhat synonymous. I mean, banking as a service is the way you create embedded finance.
Embedded finance means you're embedding the ability to offer financial product within the workflow of your consumers' daily lives.
When we talk about embedded finance, we refer to the business perspective. So how companies can integrate financial services into their customer experience, coming from the business view. Contextual finance is what we define as the customer's perspective. So where the customer uses banking in the context of another offering. So in the end, I would say two perspectives on the same thing. Banking is a part of an end-to-end process.
From my perspective, embedded finance means finance that actually isn't really designed to be financial at all. It's really about designing other journeys or experiences for customers that solve customer pain points that just happen to have finance as a component of that, rather than designing like an end-to-end financial journey. You shouldn't really notice the finance if it's properly embedded. It should just be an enabler to the other things that you want to do.
You're bringing non-traditional players into the financial services realm. And that's part of kind of bringing those financial solutions much closer to both the customers as well as other stakeholders in the ecosystem.
Yeah, I think embedded finance is the process whereby people are going to start to break down their overall business processes as they exist now and start to work out, right, how do I help my customers pay for what they need to get done?
And customers are then able to access those financial products in context when it feels right for them.
What's exciting about embedded finance is it's finance that shows up just when you need it. It's finance that's embedded in everything, whether that's your smart devices at home, whether that's the apps and services you use every day. And that fundamentally changes how finance is distributed. Banks used to manufacture and distribute finance through branches. Now they may manufacture some of the financial services, but these new bank as a service providers change the distribution model. And this could really change the whole market.
I think embedded finance actually has always been around, right? We've always gone to restaurants and there's been a financial moment in that experience, which is when we pay. You go to a hotel, the first thing you do is you check in. What is that check-in really all about? It's really about two things. One is about having a human connection, which is part of the hotel's desire to extend its brand through a human interaction. And the other is payment. And so there have always been financial moments embedded in our experiences of day-to-day activities. But what's happened is software, as we all know, is eating the world, has come in and replaced a lot of those human interactions.
Today, finance kind of gets stuck inside one app or one brand. But that's not what I want as a customer. I want to see as a corporate or as a consumer, how's my pension doing? What savings account is best for me? The questions I have, like, will I ever be able to afford a house, are surprisingly hard to answer. And why is that? Well, it's because typically you go to where the finance is, rather than the finance coming to you, rather than the finance being embedded in the products and services that you use every single day.
My personal view is, when you can understand somebody's personal journey and where they are on that development, when I can help advise them in a responsible way based on their needs, not on return on product, and start to connect all of the services that is important to them, that to me is really, a great example of embedded finance.
And our mission is really fundamentally to bring financial services and make them accessible to everyone. So meeting people where they are in their daily lives.
How do we bring embedded finance and banking as a service to life? Let's take an example with Cash App. Cash App for years was a P2P service where you could basically send money back and forth to your friends and other colleagues and maybe your babysitter. What they really wanted to do was turn this into the beginnings of a digital bank. And if you think about what Cash App's kind of choice matrix was back then. It was either call a big bank, call a big bank's processor to try to get a card issued into a pretty sophisticated software product. When they called Marqeta, what they saw was a set of open APIs where they could create an account, create a user, issue a card. So very quickly, they were able to get a modular unit called a card, a virtual card, into an app that was driving the experience of a lot of people's day-to-day lives. They didn't need a massive banking relationship. They didn't need check writing. They didn't need a mortgage. They didn't need lending. They just needed a virtual card.
And so when you embed it, as a technology vendor or as a brand, you have much more relevancy in terms of offering that particular product as part of your total workflow. If you look at even the Apple experience, Apple partnered with Goldman Sachs to offer the Apple Card. I recently went to go buy a phone, and having the Apple Card really kind of rounds out the total experience of buying at Apple. And you also understand that there's a economic and financial incentive to use that card. And so I think it drives for more customer loyalty. It drives for more customer engagement in the long run.
If you can own your customer relationship, then you can actually provide much smoother, much more powerful products, because that's the thing that stays standard no matter what configuration is under the hood.
The concept of creating the building blocks that companies can then use and put together in novel and innovative ways is fundamental to the idea of banking as a service.
Banking used to be very tightly integrated, tightly coupled. If you wanted to get a banking product, you had to get it from the same company who provided the branch, who provided the user experience. But there's a lot of stuff they were doing behind the scenes as well. They were preventing fraud. They were preventing financial crime. They were connecting to the payment systems. All of this came from one place and provider. Imagine if you could say that I want a little piece of that and a little piece of this. What you start to see is that best-in-class vendors and providers for each of those things start to emerge.
My metaphor about this world is a little bit of a mixtape. I'm in my 40s now, and I remember growing up in the 80s. I had a girlfriend, and I like to make her mixtapes. And so these were all of her favorite songs, but I had to basically go and get the albums. And there'd be one single on each album that I had to record, and I put it all together. And next thing you know, you've got one tape with 8 different songs from 8 different singers and 8 different artists. And that was a mixtape. And I think that's the vision here.
So it means that there is a great degree of specialization within the BaaS stack. And it also means that companies operating within the stack can focus on their area of expertise and become truly the best at what they do, rather than having to build the entire stack themselves in order to get something to market.
Before, what was happening, if you didn't build it all yourself, it felt very disjointed, right? Because you were clearly jumping from one property to the next. It's hard to do, but if you think about like the evolution of PayPal, right, over the last 20 years, you go back 15 years and you look at what the experience is like. It was blatantly obvious that you're no longer on the same property, right? Like it was a big change. And so because of how modularized the technology stacks and the solutions themselves have become, it now feels like a much more seamless experience. So from that vantage point, customers will feel like it's a much more top to bottom kind of experience.
I think a lot of people think of banking as a service at just purely fintech, but we also want like these sort of basic services that a community financial institution needs to run. And really any financial institution needs to have a modern CRM system. For example, it's like choose your best one. Same with fraud. Choose the mix of fraud providers that are going to be the best for your context.
The modularization of the banking stack really lets companies decide how much or how little of all the underlying capabilities they want to run themselves versus partner with someone like Galileo. And some partners use almost every solution that we offer, and others just use the very bare minimum set of capabilities they need to enable their specific use case. So it really is a really kind of a choose your own adventure and decide how much of this you need to consume and pick your various kind of items off of the a la carte menu.
All the partners we have use different elements of our offering. So if I would count it, we will likely have like 100, 150 different sub-services which we can offer, which we combine in different logics. And I would say there is no partner which uses exactly the same services, although from our perspective, everything is standardized. So every one service is a complete standard.
And a great example of that came about probably 3 or 4 years ago when firstly Starling and then a number of our other customers at the time, including Monzo, launched the capability to be able to switch off gambling transactions. For us, that was a configuration option of being able to deselect a certain merchant category code. Now, the ability to be able to whitelist or blacklist certain merchant category codes was via API was something that we've had inside our platform from day one, since 2012. But it's the fintechs and the challenger banks that are learning how to capitalize on that flexibility and configurability, come up with the ideas and take that as part of their brand.
And that's why the modular perspective, the modular approach to this is so important, because our partners can define the service which they think works best for their customers in their very specific end-to-end use case.
The beauty of API cloud-based platforms is that each of our partners can work with us however they need to, using whatever services they need to from the catalog of APIs we offer to build the applications they want to build.
My opinion is the whole thing just needs to be open. If you're providing a product that does a thing, that thing should be API enabled and available for somebody else to use. And if you don't get that right, then the rest is ridiculous. It's too hard.
Our team all grew up in the days of open source when Richard Stallman at MIT really sort of championed that movement. And we still think the openness of a platform, rather than trying to integrate too closed loop and hooking people in, is a much better way, and a much better way of treating customers more than anything.
What I want as a technologist is to have a single standardized API for, say, identity. I need to know who you and Silver is. What I can then do is, if I'm building a bank in the UK, I can plug in on FIDO. If I'm in the US, I can plug in a US provider. If I'm building a bank in Australia, I'll plug in an Australian provider to be able to do that. And that can be done up and down the stack. So, payment rails, faster payments, and chaps in the UK, ACH, and whatever in the States.
The concept is that we provide the Lego blocks for folks to build, and you take these Lego blocks and really kind of build the experience that you want, both from an end customer experience standpoint, but also from a regulatory requirement or compliance standpoint. You want like certain vendors that meet certain expectations of the banks as well as in the brands.
Embedded finance is important because it allows almost everybody to reimagine what financing can be.
People say, I need a retail account or I need a mortgage. You don't need a mortgage. You need to buy a house. Right? Modules will start to be created, create templates to be able to say, right, this is the process to buy a house. That's not, a banker would say, that's the process to take out a mortgage. A real estate guy would say, oh, that's the process to sell a house. Actually, from a customer's perspective, what I want is that template or that job to be done that says, right, this is the module, this is the flow that I need to be able to buy a house. We are not seeing that at the moment, but actually, if you had that in place at the very top of the stack, actually, then a lot of the systems underneath would plug in. Sure, you plug in your identity system, you plug in your payment rails, you'd actually plug in your estate agent. Really? Plug in an estate agent to a BaaS system? That doesn't make sense. Well, it does if you're looking at it from a end user's mortgage perspective, or an end user's house buying perspective rather than the mortgage perspective.
I don't think it's entirely there yet. I think a consumer can kind of put together the mixtape for their financial lives today with getting a mortgage from one provider, getting their banking from another provider. So the consumers can kind of mix and match these days. So at the app layer, I think you can kind of make a mixtape. At the services layer, it's a little bit harder. I think service providers are still in many ways plugged into different infrastructure. And because they're plugged into that different infrastructure, the interoperability can be challenging. And so I think the interoperability is moving down the stack from the app layer all the way down. Eventually we'll get to the infrastructure layer.
If you look at the size of the insurance market, if you look at the size of the payments market, you can extrapolate those markets and the lending market and say, hang on a minute, these businesses are doing exceptionally well, but if the way they distribute their financial product fundamentally changed, how would that market shift? And you could say that these businesses are worth about $3.6 trillion in market cap today, but if the distribution changed, who would the winners and losers be?
It could go either way. I think a brand that sees banking as a service as a pure cost reduction exercise or a way of just moving faster or just outsourcing something could very quickly end up in a situation where they've fragmented their customer experience. The positive side is that actually, if you've got the right product managers, the right technology development teams, they're kind of designing those layers that enable you to plug and play in a different way as what they're looking to offer to their customers changes and as the requirements of their customers change. But it's a double-edged sword.